Welcome everybody, Big George here. I would like to thank you for visiting my channel again. Please subscribe and hit the button so this way you guys can get all my videos when they come out first. So this way you can see what's going on in the real estate market, what information when I'm trying to buy a house could I possibly use. And that's what I do when I put out these videos. I think about the things that people ask me a lot of questions. I see a lot of people on a weekly basis, help a lot of people buy some homes. And when I see them starting to get a lot of the same questions, I want to make a video about it. So this way I can help the general public educate themselves. So this way they have a good idea on how to purchase a home, steps that are involved, questions to ask, all these important things. So today's topic, we're going to cover how to calculate a mortgage payment. Okay, so what we want to do is you want to make sure you're asking all the right questions. I find that super, super important. I'm going to use an analogy. It's like baking a cake. If you don't have all the ingredients, that cake's not going to come out too good. So if you do ask all the right questions and you're fully informed, when you go out there in the marketplace to want to go and buy a home, you are fully informed and you're not going to be surprised. You're not going to be taken by surprise or like, wow, I just didn't know all that. So some of the questions that you want to ask, whether it be your mortgage broker or your real estate agents to help you find these answers, because that's what they're there for. They're there to answer all your questions. And the questions you want to ask is, what does a mortgage payment look like in this specific area for whatever number it is that you're looking? I don't care if it's a $200,000 home. I don't care if it's $1 million home. What does that mortgage payment look like? So some of the things to help come up with that answer is, well, how much have you saved to do a down payment and money for closing costs, right? So you're going to want to know that answer as well. With a first-time home buyer, there's the FHA programs. You put down 3.5% for that. That's a very key number, 3.5%. If you're a veteran, you're able to get into a home with no money down as far as down payment. You'll still have to pay some money for closing costs. So you still have to save some money. You're not going to be able to get into a home with absolutely no money. That is physically impossible. There are costs for closing costs. Then there's things called prepays. And we're going to cover that in another topic when I go over a closing cost sheet and what to expect with that. But today we're going to talk about the whole how to calculate a payment. So the first thing you're going to need is the purchase price of the home. Number one. Number two, what's the going interest rate? You know, it's going to be different if you're buying a new construction home because all the builders are helping buying down interest rates. If you're buying a resale home or used home, that interest rate is going to be completely different. So make sure you ask. The third thing you want to ask is, what is the tax rate in the specific area that I'm looking? So the examples I'll be giving are all going to be in South Polk County, because that's where I sell homes. And I know those like the back of my hand. The fourth question you're going to want to ask is, what does insurance cost yearly and monthly, of course, on a home that's priced that in the specific area that I'm looking for? Another very important question. And the last question you're going to need answered is, what are the community fees, and are there any CDD fees as well? So those are the types of questions you're going to want to ask and you're going to need to get a good idea or good understanding. So what we're going to do here is I'm going to go to my trusty mortgage calculator. I'm going to put this link down below for you because this is an awesome tool. I use it literally every single day, and you can play with it and plug in numbers. And I sit with people because, of course, I'm not a mortgage broker. But if they ask me that question, I help them give a bird's eye view or a ballpark number of what that payment will be about. And I'm usually within $100 one way or the other of how close it is, because I don't know the interest rate. So I'm like, well, if you qualify for this specific interest rate, this is what it's going to look like if you qualify for that one. So I just try to help them out So this way they have a good idea of what they're doing before they do the mortgage. So what you want to do is you want to plug in the number. We're going to use $300,000. The reason we're going to use $300,000 is because in South Polk County, the average home sales, according to the MLS, is going to be about $304,000. So that's why we want to use this $300,000 number. It's a decent number. You're going to go FHA, so you only need 3.5. It's obviously going to be a 30-year mortgage term. We're going to use what we do here at Lennar. I'll give you a good idea. We're in the 5.25 range currently that I'm seeing. It might be a little bit less. I've seen it as low as like 4.875, and I've seen it around 5.5. So that's kind of like the range. It just depends on the person's credit, their assets, and how they qualify for that loan. So I'll use kind of the median there in the middle just to give us a good idea. The average tax rate in South Polk County is about 1.6%. I would say that's a pretty decent rate there. Payment of for the insurance. I've seen them as low as $1,200, and I've seen them at $1,500. So it just really depends. We'll go with the middle here. We'll go $1,400, huh? Why not? And does that community have an HOA or CDD? Now, the average HOA and CDD on these communities that have amenities and pools and stuff like that are right around $250, give or take $50. I've seen it anywhere between $200 and $300. So we're going to go right in the middle for the sake of this video, and we're going to go right about there. So when you enter this, make sure you put the HOA and CDD in this. Let me move. I'm going to move me right here where it says HOA fee. So this way you can have all of that. So even if I have a super savvy buyer and they've calculated a lot of this, the one thing that they tend to forget is the private mortgage insurance, which you see right over here. And you're like, George, what is private mortgage insurance? That is a insurance policy that every home buyer pays if you put less than 20% down. And essentially, that insurance policy covers the lender in the event that you are going to foreclosure. You put less than the 20% down, which is the magic number here in real estate. The reason it's the magic number in real estate is because that's exactly how much it costs the lender to foreclose on a property, take it back, remarket it, sell it to recover their money. So when they're giving the people the opportunity to put less than that down, they need some coverage to make sure that just in case something goes wrong, that they'll be okay. And of course, the home buyer pays for that. So if it's an FHA, it's private mortgage insurance. If it's a conventional loan is called mortgage insurance premium. They're both the same thing. And a lot of it also has to do with your credit. So this is just a good average of where it would be at this number, at $300,000. So when you look over here, you see the principal and interest is $1,599 a month. The private mortgage insurance is $193 a month. Your property taxes are going to run you about $400 a month. Your home insurance is going to run you about $117 a month. And then the HOA and CDD, because we put them both in there, are going to run you about $250 a month. And then for a $300,000 home with these numbers here, it's going to run you approximately $2,560. So I would say I'm usually within $100, so give or take $100, depending on that person's specific credit profile. So if you're looking around a $300,000 home, you would expect in a community that has an HOA and a CDD with insurance, and I would say this would be a little more of a new home. You'd be looking right around $2,500 to $2,600 a month. Okay, so let's just say, hey George, what if that was 5%? Okay, so remember it's $1,599 a month, and let's say you got a pretty good interest rate. 5% these days is really awesome. It's going to change just slightly. You can see right here on your principal and interest, it just went down, a couple 30, $40. So you're looking about 2,515, okay, at a 5%. So here's something I want to do for fun. Go back to 5.25, okay, and some of the lowest home prices I've seen are about 260,000 in new construction. Okay, we're talking about 3-bedroom, 2-bath home. No builder that I'm aware of that's not a condo or a villa are building any 2-bedrooms. They're all usually 3-bedroom, 2-bath with a 2-car garage. And even at a very low price in this market at 260,000, you would be looking at roughly $2,251. So we'll say between $2,200 and $2,300. Okay. So that's really, really good to kind of like, gee, everything was there. So let's say you're a person who's looking for a $2,000 mortgage or under. Unfortunately, that is those days are kind of passed us by, at least at this point in time in our lives. I don't have a crystal ball in the future, but I haven't seen payments under $2,000. Gosh, in probably about 3 or 4 years when the rates were at 3% and 2%. So that's going to be really tough. But just in case, that's what a person's looking for. Let's kind of play with the numbers here a little bit. This is for educational purposes. So this way you can figure it out. I would like you to play with this yourself a little bit. But if you find a home around $200,000, most likely it won't have a HOA or CDD. It's probably an older community. CDDs didn't really come into fruition here or reality until about 2008. So a home that would be around that would probably be a home that's about 30 or 40 years old. So they probably have no HOA or CDD. So we'll clear that out. This number, though, would definitely have to go up because your average payment yearly would be about $2,000 a year. And it would not be new construction, and you would no longer look at a 5.25. You would look probably closer to a 7% interest rate. And that's what would get you under $200,000 a year. You're looking at roughly about between $1,800 and $1,900 a month. Okay, so these are some really good things to know, and that's why it's important that when you speak to a real estate agent or a mortgage broker, you want to ask a lot of great questions like we talked about here, so this way that you're properly prepared. Unfortunately, not everybody comes in well prepared, and sometimes I'm the first person telling them this information, and they get a little distraught, and their heart gets a little broken because they didn't have the right information. And I really don't want people to do that. I want people to be informed. That's what's super important. The reason why I do this is I want to help as many people as I can to understand how to get what they're looking for. And sometimes they have to find either a co-signer or, maybe in a different area where that number, you can find a $200,000 home. What you can't be is rigid. When you are on a fixed budget and a fixed income, you have to basically live where it's affordable. Okay, and if you want to live in a very specific area, you have to make sure that your income and your budget fits that situation. So definitely give me a call if you have any questions. I'd be happy to walk you through it or answer any questions that you may have. I hope you found this super informative. I'm going to produce a lot more of these videos to help the first-time home buyer kind of take these in bite-sized chunks, because if you did everything in one 2-hour course, it would melt the brains. It's a lot of information to take in at one time. So you want to do it in bite-sized pieces. So thank you again for checking out my video. I'll see you guys on the next one. Have a great day.